The Reserve Bank has left interest rates on hold at 0.1% despite strong signs of economic recovery. Let's go to our business reporter Ed Boyd for all the details now. Ed, good morning. The Reserve Bank kept interest rates on hold at record lows yesterday. What power does the bank have to influence the economy?
Well, that's the thing, Pete. They don't actually have that much power at the moment. Normally, their main trigger point or lever to influence the economy is cutting the cash rate. And yesterday, they kept the rate on hold at the record low of 0.1%. And the Reserve Bank Governor, Philip Lowe, has said he's not interested in cutting the cash rate any further and doesn't want to go to negative rates. So the only real thing the bank can do is buy government bonds. And it has announced further bond buying over the last couple of months and will be buying billions of dollars in bonds throughout this year. On Friday last week, the stock market, Aussie stock market, dropped more than 2%. That was on rising bond yields. Investors realised they could actually get a better return buying a bond than they could buying a share, which would have paid them dividends. So the Reserve Bank would have been a little concerned about this, and on Monday it actually doubled the amount of bonds it was buying, from $2 billion to $4 billion on Monday. That brought bond yields down and made shares a more attractive investment option again. So the bank is going to be watching financial markets closely. And yesterday it said it's bought $52 billion worth of bonds so far, and I think the total is going to be close to $200 billion by the time their bond buying program is over. But that's really all the Reserve Bank has at the moment in its book.
Ed, later this morning, Australia's economic growth figures for the December quarter will be released. Plenty of attention around this, but what are economists predicting at this stage?
They're predicting a positive quarter of growth. This December quarter, they're expecting a rise of about 2.3% economic growth for the quarter, and for the year 2020, economic growth to be down 2%. But if we look at this table here, it's basically a chart showing the economic predictions from the big four banks, and there's a range between about 2.3% growth for one bank up to 2.9% growth. So there's a bit of variation here with the banks, but really, the key thing is this is going to show Australia's economic recovery is really well and truly underway. Household consumption, household spending is predicted to be a big factor in boosting economic growth over this quarter. The amount of Australians at home last year saving money, they're spending that money and injecting it back into the economy. Obviously, iron ore exports have also been strong with an elevated iron ore price, so that's going to give the economy some support too. But it should be some pretty good numbers to look at coming up later in the morning. The negative growth, though, for 2020, minus 2%, that's actually a lot better than what was predicted. Last year in May, it was predicted that the economy would fall by about 5% during 2020. Well, if it falls by 2%, we should get the figures in a couple of hours' time.
Yeah.
That's a much better result.
Yeah, they're not bad at all, that's right. And is that why the CBA economists believe that today's numbers, Ed, will confirm that V-shaped recovery?
That's right. Look, last year we were talking, is the economy going to have a V-shaped recovery? Is it going to be a much more gradual U-shaped recovery? Or
W even?
A W-shaped recovery. Go up, get the jitters, go back down again, then go back up again. Well, the economy grew by 3.3% in the December quarter. If it grows by about 2 to 3% in the December quarter, that's a V-shaped recovery in anyone's books.
Yeah, and we'd love to see that, considering what the potential was last year. And what effect could this have on the stock market, Ed?
Well, it could have a positive effect on the market. I think the thing to remember, though, is this is obviously backward-looking data. It's from the last 3 months of 2020. We're now already in March 2021, and markets are always trying to look ahead at what's the future for the economy. But positive signs in the December quarter, I think it should have a good impact on the market today. The market is meant to be pretty flat today, but if it's a really good result economically with better than expected growth, then I think it'll give the market plenty of support today.